In the last 5 years, JPMorgan is up 28%. Year to date, it's up 8%. And during this past month, JPMorgan has been all over the news. JPMorgan was full-service bank for Jeffrey Epstein's prolific abuse. Insiders at JPMorgan sold $25 million in stock, alluding to potential weakness. JPMorgan found $1 billion in suspicious Epstein activity. A tangled mess of tech, JPMorgan's tall task to integrate First Republic. And banking giant JPMorgan unfazed by crypto downturn. Okay, let's first look at JPMorgan stock and determine an optimal price point if you're interested in buying it. When we see price targets for JPMorgan, on the low end we see it at $140, and at the high end it's $219, with the average price at $169.34 per share, signifying that most analysts think JPMorgan is undervalued compared to its stock right now. Looking at the 6 most recent recommendations, all maintain a hold to buy rating. Let's also include Graham's number, which is a valuation method popularized by Benjamin Graham, the father of value investing and Warren Buffett's mentor. We include the book value at $98, earnings at $15, and so we get $185.27 per share, making JPMorgan surprisingly undervalued right now. But unlike analysts who can be too optimistic sometimes and Benjamin Graham who can also be too conservative, there should be a middle ground, and that's my fair value price for JPMorgan. But before we get to that, join my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. So should you buy at its current price? I give JPMorgan a fair price of $173.84 per share. Right now, the stock is undervalued, and you'll see that many long-term investors will think so as well. Now you know the price you should buy, but we need to analyze the business and see if there's a good business behind the stock. For the rest of this video, you'll see a point system at the top right-hand side of the screen. 1 point will be added every time we have a good metric. The closer we get to 16 points, the better the business. And we made minor tweaks to the total points since we're looking at a bank. Let's first look at JPMorgan's expected growth, otherwise what we can expect them to do going forward. We want both growth metrics to average above 8%. JPMorgan's next year's projections are weak at negative 8%, and the next 5 years looks like that growth will level out at negative 4.3%. Since it didn't pass our threshold, no points added. Next, let's look at JPMorgan's key valuation metrics, specifically 5 of them. These key ratios, we want all of them to be below the index in order to give JPMorgan a passing grade for this section. The price to sales ratio is at 3, whereas if we invest in the index, it would be at 2.4. No points added there. The PE ratio is at 9, whereas the index is at 21. We can add 1 point. The price to cash flow is at 12, whereas the index is only at 15. Another point. The price to book is at 1.5, whereas the index is at 3. Yet another point. And for the PEG ratio, we want the ratio to be below 1, and it's at 2.9, so no points for that one. Noting that down in this section, we add 3 points. Following that, let's look at JPMorgan's operating performance, specifically 3 key metrics that deal with its business health. For these first 2 returns, we want the percentage yield to be higher than the alternative, which is again the index, in order to get a passing grade. The return on assets is at 1.1%, with the index at 10%. No points there. The return on equity is at 17%, whereas the index is at 27%. Again, no points. For this margin, we want the yield to be at least above 15%. JPMorgan's net margins look very healthy at 32%. 1 point for that. And for this section, we add only 1 point. Next, let's look at JPMorgan's dividend metrics. Basically, if you like me and put great importance on getting paid as a shareholder, you'll focus on these metrics. JPMorgan is pretty good since it pays $4 per share, translating to a 2.7% yield, which is lower than its 5-year average, so we don't put any points there. Including its buyback yield of 1.2%, so we've got an annual yield of 3.93%, which is good, but not higher than its 5-year average, so no points there. When we look at the payout ratio, JPMorgan pays out 25% of its profits to shareholders, which is lower than its 5-year average, and there we can add 1 point. For this section, we add a total of 1 point. Let's move on and look at JPMorgan's financial health by checking out its balance sheet during its most recent quarter. For these 3 metrics, we want a decent figure, but also we want them trending in the right direction to give a passing grade. We see its assets at $3.8 trillion, which is trending up, so we can add a point there. Debt at $405 billion, which is trending up. Usually that's bad, but for a bank, that's good. We can add another point. And cash holdings are at $495 billion, which is trending up, so we can add a point there. For this section, we add 3 points out of a total 3. Looking at free cash flow, right now JPMorgan has a negative cash flow, but it's trending up, so we can add a point there. And finally, for this section, we add 1 point. What I see from these key metrics, JPMorgan has an average business. In the end, I give JPMorgan a final grade of 68 out of 99. Overall, we've got an average business, but at least it's undervalued enough. Aside from this Epstein affair and recent bank downgrades, I'd consider investing in this company as a long-term investment. So tell me what you think of JPMorgan Chase. Invest wisely, and as always, take care of your money.